Good day to everyone. On behalf of the co-authors, Ms. Stephanie Go, Ms. Vivian Lim, Ms. Mercus Albao, this is Mr. Discoro Bailon. We are here to present our paper, Delving into Behavioral Finance, uncovering the linkage between investment preference, investor's profile, personality traits, risk perception, and investment goals. An investment is a popular vehicle where people invest their monies in the hopes of generating more income. As a result, people, being rational, are expected to make investment decisions that will give them maximum returns. However, this does not seem to be so in reality. Thus, it begs the question, are there factors that influence investment preferences of people, specifically their personality traits, risk profiles, risk perception, and investment goals? Are investors irrational decision makers? In this paper, we would like to answer the following questions. Is there a relationship between investors' profile and investment preferences, and personality traits and investment preferences? Is there a relationship between risk perception of investors and their investment preferences? Does risk perception mediate the relationship between personality traits and investment preferences, and investors' profile and investment preferences? Are there differences in the investment preference for different investment goals? Our motivation for writing this paper were to determine whether investors' profiles and personality traits affect investment preferences of the respondents, identify the influence of risk perception on investment preference, identify the mediating effect of risk perception on the relationship between personality traits and investment preference, and investor's profile and investment preference, and also to determine if there are differences in the investment preference for different investment goals. The variables of interest in this study are the following. We have investor's profile consisting of conservative, moderate, aggressive, investment preference that can come in the form of short-term, medium, and long-term, personality traits consisting of the big five traits: conscientiousness, extroversion, neuroticism, agreeableness, and openness to experience. We also looked at risk perception and investment goals in the form of extra income, emergency fund, children's future, retirement, house construction, and leisure. We sought to look at the relationship between explanatory variables, namely investor's profile, personality traits, risk perception, investment goals, on our response variable being investment preference. This paper attempted to see the mediating effect of risk perception or risk aversion on the different investors' profile and investment preference. Also, it sought to determine the mediation of risk perception on personality traits and investment preference. The research is a causal or exploratory research and used purposive sampling. There were 96 respondents who were employers and employees here in the Philippines. They're investors either in stocks, bonds, money market, mutual fund, or forex. The survey instrument used had four parts, namely investor's profile, personality traits, level of risk aversion, and investment preferences. For the statistical treatment of data, inferential statistics like ANOVA regression and mediation analysis were utilized. A big chunk, 89% of the respondents were employees. Most of the respondents did not have any formal training in investment. Stocks at 89% and mutual funds at 46% accounted for the most type of investment. 45% of the investments of the respondents, had a year or less in investing experience. On the other hand, for the employers, 82% of them had more than 5 years investing experience. Half of the respondents regarded themselves as moderate in terms of the risk profile. Also, investment goals were mostly geared towards emergency funds and retirement. We sought to determine if there was a relationship between investor profile and the three types of investment preferences. Here are the findings. There were no significant relationship between investors' profile and short-term investments. However, for investment goals, emergency funds had a significant positive relationship with short-term investments. As regards medium-term investments, there was a negative relationship with conservative investors, but a positive one for moderate investors. This indicated, unlike the moderate investors, conservative investors were less likely to invest in medium term. For long-term investments, conservative investor showed it was less likely to invest in long-term investments. This was in contrast to aggressive investors. Another relationship we want to determine was between personality traits and the three types of investment preferences. Here were the findings. In all the three preferences, there were no significant relationship with personality traits, no significant relationship with respect to short-term investments, neither for medium-term nor for long-term investments. Another relationship we wanted to establish was that between risk perception and investment preferences. Just like the personality tests, traits, risk perception did not have a relationship with short-term investments, neither for medium-term, neither for long-term. Does risk perception mediate between investors' profile and investment preferences? This was for us one interesting question we wanted to answer. In the diagram, we find risk perception mediating between investor's profile and investment preference. To answer this question, we first determined the relationship between risk aversion and investment profile. We found conservative and aggressive investor profiles significant predictors of risk aversion. Investment preference is then regressed on both conservative and aggressive investor profile. Only the conservative investor profile was found to be a significant predictor for both medium and long-term investment. Finally, we determined if risk aversion mediated the relationship. First, we found out that risk aversion did not mediate the relationship between investor profile and aggressive investor preference. However, risk aversion mediated the relationship between investor profile and conservative investor preference. Since conservative became an insignificant predictor of long-term investor preference, then we were able to come up with that conclusion. We also sought to determine the mediating effect of risk aversion, this time on personality traits and investor preference. As shown in this diagram, we see risk perception mediating personality traits and investment preference. We first determined the relationship between risk aversion and personality traits, and the study showed only openness to experience as a significant predictor of risk aversion. Regressing investment preference to openness to experience, we've inferred that it was not a significant predictor of investment preferences. Hence, risk aversion did not mediate personality trait and investment preferences. Finally, we addressed the question of differences in investment preference in terms of investment goals. The results showed that there was no significant differences between investment preferences by investment goals. This verified the result of the regression where only emergency fund was found to predict short-term investments. The study gave us some practical insights. First, there was a partially significant relationship between investors' profile and investment preference. Moderate investors tend to invest in medium-term investments, which is consistent in the study since this type of investors want a less risky but steady growth of investments. Aggressive investors tended to invest more in long-term rather than short-term, which differed from the usual views in finance since aggressive investors normally would look both at long-term and short-term investments. Also, there was no significant relationship between personality traits and their investment preferences. Personality traits were not relevant in a person's investment decision making. Also, risk perception through levels of risk aversion was unable to predict investment preferences of investors. Risk aversion mediated the relationship between conservative investor profile and long-term investor preference. There was a partially significant difference between investor goals and investor preference. Emergency fund tended to influence short-term investments positively. For our recommendations, we recommend that demographic-related questions not included in this study be added. Also, a different taxonomy other than the ones used in the research be adopted, and include prior research, prior knowledge in the future. According to Outreville, causality links between risk aversion and education have not yet been explained. Thank you very much.